Hi, and welcome back to the Business Career College video series. In this video, we're going to look at the benefits for the child of a CPP contributor. And there are two situations in which the child of a CPP contributor will get benefits. And those are if their parent dies. So we're going to look at if the contributor is deceased and leaves behind a child. And we're going to look at what happens if the contributor becomes disabled. They're both very similar. There's only a very minor difference really between the two, or one administrative difference between the two. So if we have a deceased CPP contributor, we're looking for the child to be either under the age of 18 or under 25 and a full-time student. And that applies also to the child of a disabled CPP contributor. Now, for the disabled only, for the child of a disabled CPP contributor only, deceased, I apologize. For the child of a deceased CPP contributor, we also have a benefit payable if this child is disabled. And the rules for this are a little bit complicated, but we're basically looking for a child who was disabled since before age 18 or since age 18 or earlier. In all cases, whichever of these three circumstances we're looking at, the child must be dependent. And the test for dependent is not what you might expect. It's an income test. So we're looking at the child's income. And this income has to be less than the basic personal amount, about $11,000, or if disabled, then less than the basic personal amount plus the disability tax credit amount, which comes to about $18,000. So we're looking for the child's income to be less than about $11,000, or if the child is disabled, and only if the child is disabled, less than about $18,000. And those amounts will change every year. They always are adjusted for inflation. So then the benefit amount here is going to be, as of 2013, currently $228.66 per month per eligible child. So you die and leave behind two children, you would leave behind a benefit of $228.66 per month. And as we are probably quite accustomed to now, this amount is both indexed and also taxable. And it would stop at age 25 or when the child is no longer a student, whichever. So when they no longer meet the criteria that they qualified for, the benefit ends, which of course makes a lot of sense. And we also have to recognize where this benefit is taxed, and it's taxed to the child. This becomes sort of an income splitting provision, especially if the child is a minor, in which case the benefit is paid to their parent or to whoever is taking care of them, their guardian or whatever you have, but always taxed to the child. Once the child is over the age of 18 and no longer a minor, 18 or over and no longer a minor, then the benefit is paid to and taxed to the child. So it's a relatively simple calculation. It's just a little bit extra here, and this can be meaningful. You die, you leave behind a couple kids, that's a couple benefits. A child could actually be collecting as many as two benefits if they had two deceased parents, or one deceased parent and one disabled parent, or two disabled parents, but no more than two benefits. I hope that helps to understand the Canada Pension Plan benefits for the child of a deceased or disabled CPP contributor. This is something that certainly shows up both in exams and in real life scenarios. Um, Enjoy your ongoing studies. Thank you very much.